Alan, tell us about your business and what's limiting its growth right now.
Keeler Reserve is an investment platform for industrial metals, starting with copper. So if you think about, the overall investment space for both precious metals and industrial metals, they're very different. Everybody knows how to buy gold, silver, and whether that be physical or whether that be something that they trade, via an ETF or something through their brokerage. Industrial metals like copper, aluminum, they work a lot differently. One, they're not easy to invest in through a brokerage. Two, from a physical standpoint, you can't hold them like a gold coin, a silver bar, et cetera. So for the majority of Americans or consumers in general, they don't have that ability in their portfolio today, whether that be both an allocation in a stock portfolio or the physical asset themselves. So from a business standpoint, we launched our platform last year. So from a constraint perspective, it's really, we have an amazing platform. People don't know about us. The constraint is foremost knowledge and, the marketing power. And then the second constraint, which is important to us and something we address via the marketing, via our website is, how can customers really trust us? Being a relatively new business and dealing with physical metals, like how do customers know that those metals exist and that we do what we say that we do? So that's really what we're up against as we look to grow.
Right. Awareness and trust. We'll do a deep dive soon. But before we do, let's talk about the goals. So tell us about your revenue last year and what's the 3-year revenue target that you have set for the business?
So, within the last 12 months since launch, we've brought in, between $4 and $5 million of investment in our new products. From a kind of shorter term goal perspective, we want to get to, between, I know it's a big range, but between $1 and $5 million a month. So we get to about $100 assets under management. And we'd like to grow from there.
So last year revenue between 4 and 5 million, 3-year target around 12 million.
3-year target, we want to be at a $1 to $5 million per month run rate.
Oh, 5 million per month. Okay.
Yeah, we want to have we're working hard, a long way to go, but we have goals of being at over $100 million under management.
Right. When you say 100 million under management, that's not your revenue, right?
That's our sales. I guess I would call that gross revenue. But then from a margin perspective, I mean, the way we make money is, we basically have, a commission or a spread on what we sell. So our margins, they vary with how the market's working. But, for the sake of this call, let's call our target margin around 4%.
Right. So on that 100 million, you're going to make 4 million for the company.
That's right. In kind of contribution margin.
Okay. As in that's what's coming in, right? For you to take home and spread to your employees and pay your bills.
That's exactly right. I mean, the majority the difference there being, the purchase of copper on behalf of customers.
Right. Okay. So net gross profit, 4 million is the target. And last year it was less than $1 million then?
Yes. Okay. Again, just on that 4 to 5 million, let's call that, $200,000.
Okay. All right. Makes sense. Perfect. All right. So we have the goal defined. So we're looking to 20x in 3 years, and it is a brand new platform. So, it's not an unreasonable target. Let's do a deep dive on the actual platform. Tell us about why there was a need to trade copper, right? I'm guessing these are people who are investing in this industrial metal. Are these mostly retail investors or are there institutional investors buying these?
Mostly retail investors, but that retail investor could be, a wide variety of, different archetypes. So, everything from a customer looks like anyone from, a self-reliant individual who understands real assets, buys gold and silver on a relatively small scale, but doesn't have exposure to copper, or they could be, really strategic investors that have a relatively large portfolio and, want to diversify within the commodity space and need a better option to invest in. And again, we're talking about copper specifically, but as we get into the conversation, there'll be more metals behind that. So it's not copper only. That's something we're going to evolve. evolve to help us reach our goals. But on the platform today, it is copper.
Okay, so we started with copper. Why copper?
Copper has just an amazing supply and demand story. So starting on the demand side of the equation, with AI data centers, with electric vehicles, with rebuilding of the power grid, with further development across the world, anything requiring electricity requires copper. Copper conducts the electricity from source to use. So, AI data centers, that's probably the most popular current example. They require, depending on the size, anywhere from 5 to 50 million tons of copper per data center. So just phenomenal growth from that mindset. But EVs, like if you think about wind turbines, they're all just loaded with copper. It's the most efficient conductor of electricity.
Right.
And then you think about the supply side. So one stat on demand first, actually. Robert Friedland, who's one of the most legendary miners of all time. As he looks at his the studies and the data, the quote that he uses regularly is that in the next 15 years, we'll need to mine more copper than we have in the last 10,000 years. So that kind of puts a nice visual on just the demand increase that we're talking about.
Right.
From a supply side perspective, a new mine takes 15 to 20 years to come online, from finding the copper, doing the studies, getting the permits, building the mine. So there's a huge lag time from that shortage to being able to actually address it. Beyond that, a lot of the easy copper, we've gotten out of the earth. What I mean is, relatively relatively on the ground, not deep into the earth. And from a grade perspective, if on a relative basis, if today, you go into a mine and, the rock is 50% copper, there's declining ore grades as we move forward. So you have to do a lot more work to get the same amount of copper. And then, so the story from the investment thesis there, again, it's economics 101. It's, hey, demand is rising greatly. There's a supply constraint, therefore prices must increase.
Right. One might argue that essentially you're holding it in reserve when people buy this, right?
That's right. 100%. So our business model is that for every dollar or pound of copper that a customer buys, we have at least that amount of copper, in a third-party storage facility. So there's one-to-one backing, and we can talk about as we get into it, why that's a better investment opportunity directly in the metal than what's out there today. But yeah, that's exactly right. We own the metal. Our customers own the metal.
Right. So some might argue that aren't you making the problem worse by holding all of this and not putting the copper in use, like in data centers and stuff?
It's a kind of an interesting argument. But really, there's still a vast amount of copper. So it's not like we're going to have, $400 billion worth of copper that's kind of making a big difference on the global scale. So like the amount, like when we talk about wanting to have $100 million under management, that's not really moving the needle one way or the other, from a global supply perspective. So, I would say we're not, we're investors, we represent investors, and at different points in time, when the market's right, we'll sell. But it's the same as, some miners, as an example, might wait to mine the copper because they can sell it more in the future. So that's kind of an overall supply story that, goes well beyond us. But, even at our grandest ambitions, the copper market globally is so large that what we do isn't, it's not keeping a rare mineral from use in any large context.
Right. In the US, are the US companies self-sufficient? They are able to secure copper from the US, or they have to import from outside?
Oh, we're mass importers of copper. So the issue in the U.S. is not that there isn't copper in the ground. It's that mining's been relatively unpopular, over the last number of decades. So when you think about it on a global basis, we import a lot of copper from Chile and Peru in particular. The Democratic Republic of Congo is another kind of mass exporter. But just this past year in Arizona, the first copper mine came online in, something like 20 years. And then the other issue that we have here in the U.S. is that not only do we not mine our own copper, but we don't have a lot of refineries that can turn that copper into a usable form. So by and large, we're, as an economy, we're dependent on imports for copper. And that's one of the reasons why, when tariffs were such a big deal last year and this year, there's no import tariff on copper cathode because there's been recognition that, we need it, and it's not something that we can just turn on in the U.S.
So you mentioned copper mining has been unpopular. Why is that?
And largely it's been a dirty business. It's from an environmental perspective. And just I think from a as you think about it worldwide, that hasn't necessarily been the case. But in the U.S., I guess the investment thesis hasn't made as much sense. Permitting and all of that is very difficult. I'm not gonna, I guess I am, but I don't. It's in an exaggerated basis. It's kind of like drilling for oil in Alaska, where there's those sort of concerns, and there's people on both sides of the equation in terms of whether they're for or against it in their communities.
Where are you sourcing copper for your own reserves when customers buy them?
Yeah, so COMEX, I'll refer to COMEX and LME. COMEX is really the U.S. Mercantile Exchange. LME is the London Mercantile Exchange. Those are the two largest markets for copper and really most of the metals. So we source 100% LME COMEX approved copper from industrial suppliers.
They're all U.S. based?
They're all international corporations. So most of the copper that we get is, it comes in in the U.S., it comes in through the large COMEX port in New Orleans. And we have a third party storage facility there. And many of the large suppliers, keep their product there. And it's easy for us to source.
Right. So when you say source, I'm just thinking in my head. So say at a given time, you have customers who have X amount of copper that they have bought through your exchange. So how often would you be, because it's changing every day, right?
Yes.
Like some people are buying, other people are selling. So how do you track and how do you maintain that inventory and make sure they're at the correct levels?
Sure. So again, just talking the specifics about the copper market, a standard order from an industrial perspective is 25 metric tons. So that is at today's copper price, or roundabout, using round numbers, call it $5.50. Call that $137,000. whenever there's an order, we have a daily ledger that we're looking at, and we're always making sure that we have enough copper to sell at the market price to our customers. And when they exceed the amount of copper we have, we go ahead and buy another order and make sure that within the standard delivery periods that, again, our customer balance is, the amount of that physical copper we have exceeds our customer balance of copper.
I see. You mentioned trust as being a potential constraint. Do you have some kind of like a third-party auditor or third-party?
We do.
You do?
Exactly.
Okay.
So we actually just completed our first audit at the end of the first quarter, so just last week. And they look at our customer records, make sure that they understand the amount of customer copper we hold, and then they actually go to the storage facility and do a physical audit, looking at the bundles of copper that we have, and making sure that we'll be publishing this on our website shortly, but making sure that ratio is what we say it is. Making sure the copper that we've purchased, matches what we've said we've purchased. And again, they're a third-party audit firm, third-party storage facility, and that's having that as part of our process is one of the things that we do, and we believe is critical to making sure customers get every possible acknowledgement that what we're doing is the right thing, and we're doing what we say we do.
Does copper ever expire, or it stays in its physical form like forever usable? In our facility, there's no degradation of the value of the copper. One of the other interesting things that we can kind of get into is copper is also infinitely recyclable. So that's a secondary story as far as it's not necessarily an efficient process, but as you think about copper at different metal facilities, metal recycling facilities, I mean, it does have a lot of value, and people bring in copper from old projects, electronics, et cetera. But yeah, from that perspective, I mean, that's one of the other great things about copper as a metal. Right. So yeah, so never expires, never degrades. Does it have to be like temperature controlled or something, or temperature doesn't matter?
It doesn't matter.
Okay. Do you have to like report this to the SEC? Is SEC involved or any other regulatory body?
No. So again, we're dealing with physical copper. We're not dealing with an investment contract, futures. We don't re-lend. It's called rehypothecation. None of the copper in our facility is lent out for others. It's, I like to use like baseball cards or something else. We're selling a physical product that is being stored in a facility, and it's not an investment product. It's a physical product.
On the commodity side, is there an equivalent SEC-like authority that regulates?
Well, there's a CFTC. So again, when you're talking about futures and the exchange, absolutely, that's very, very closely regulated. But again, we're not selling forward contracts. We're selling the physical product. Right. So that's the key differentiator.
Okay. So how do you determine the price? So it is a physical product. It's not a future contract. So essentially, you have to correctly determine what the current price at this given second is, right? I'm guessing it fluctuates just like gold.
It does. So, we have a line into our various suppliers, and then we can look at different, third party, including the COMEX and the LME, and kind of triangulate what a spot price might be if we were to buy it today. And then we add on our spread or subtract our spread in the case of a sale, to get both the value today as well as where we're going to buy and sell it.
Is it a standardized price? Like I remember in like Forex, like foreign exchange, depending on the bank you go, it might be slightly off. Is it something like that where it's not like a standard exchange and the prices may vary?
Well, there's a few things going on there. So if you look at gold as an example, which is again highly traded, there's a spot price that you can go online and see, and everybody agrees that that is the spot price at a period of time. So copper doesn't trade that way. It does trade on forwards or futures. So right now we're in April. There's a May future. There's a July future. And futures 8 out of the 12 months of the year. So there's a there's a margin on top of that based on both liquidity, availability, and time that we can again back into what the price is today. But at the end of the day, we look at a number of different suppliers, and they all give us their price, and that's kind of the best baseline that we operate off of.
So yeah, help me understand this. So say you have like say 5 suppliers and you have a need to buy 25 metric tons of copper. So you will contact all those 5 suppliers and ask them for a price, and you'll just go with the cheapest one. Is that how it works?
So just first from a quality perspective, I mean, all of it has to be registered, CME, COMEX, LME grade. So like that's kind of the minimum or the best standard there is, and we don't compromise that standard. But effectively, yes. And it doesn't need to be a daily conversation with each one, but we have a kind of a cadence so that we make sure that we understand where they are relative to those future prices at different points in time, and and can refresh that price with them. So it's an ongoing conversation, but it's not like we're talking every minute.
Right. No, but when there's a need, right? Because you mentioned earlier that you always make sure that you have enough on hand and it never exceeds what the customer might buy, right? So
we're always in tune with the market. I mean, it's
right. No, I understand that. But what I'm asking is like, how do you, when it's time to actually hit the buy button for your internal...
we call the supplier of choice and execute the trade, and it's delivered to the warehouse within standard delivery times.
What's the standard delivery time?
For the majority of what we do, it's 2 days. And if it needs to come into it, like we coexist in some facilities with some of our suppliers. So I mean, I literally give the kind of the visual of, the copper's already all in one big facility, and a forklift comes in and moves it from this pile to this pile. And that's what occurs the majority of the time. But if it needs to come from another facility, then we purchase it and settle within 2 days. But it's delivered typically within a couple of weeks. It's already owned by us.
Okay. So you're saying you're already, it coexists in the same warehouses. So they just move it from this position to another
that's
position.
Kind of the 95% of the time. That's the way we operate.
Right. So you didn't have to even pay for like your own warehouse. You're like,
that's right. I mean, actually, that's kind of one of the advantages of the product as well, is that, or not the product, but the program, is that we use these large industrial facilities that are, again, it's a COMEX approved warehouse, the one I'm referring to. So, they go in and do their audits themselves, and we're one of many users of the space. And again, that's part of the trust process as well. I mean, it's not, our real estate. It's not, our management. It's professional, certified facilities.
Right. So so the value add that you are providing in the marketplace is in the form of the Kilo Reserve platform itself?
Absolutely. It's one, our ability to source the metals at efficient prices, and 2, coordinate the storage, So if you think about it from an individual's perspective, let's say they want to, and an average investor wants to invest somewhere between $1,000 and $10,000. They don't have the ability to go in and buy copper at a close to the market price. And if they did, nobody wants to store a ton of copper in their garage. So it's access and it's efficiency and liquidity that we provide.
Right. Is there enough demand for copper? Because I'm sure that people, if given a choice between buying gold or copper, most people would pick gold, right? Because it's more shiny, more like everyone wears gold jewelry, and there's a lot more liquidity. So how do you compete with precious metals that are already so prevalent in the marketplace?
Yeah, great question. I mean, if you think about kind of the way we operate, I mean, there are probably 10 different gold and precious metals online dealers that offer kind of a similar storage model that we do, that have over $1 billion worth of assets on them. So the scale of the precious metals market is phenomenally large, and well known. So if you're looking at a kind of portfolio, we believe gold and silver all have a place in the portfolio for sure. Copper has a different story. I mean, again, we kind of talked about that supply demand piece, and it's in addition, there's a diversification piece. So the market itself, I mean, certainly, billions of dollars of investors in the space, largely today already. Largely, they invest in copper miner stocks or copper miner ETFs, which really don't provide direct access to the benefit of copper. As an example, if copper miner A has a large safety issue in one of their mines, or business mismanagement, or they operate in a country that changes the rules and brings in geopolitical risk, the cost of copper could be going up dramatically, but that business might underperform. There's also investment in copper futures and rolling them forward, but there. The main issue is that, one, copper in the futures, the further out, are more expensive. That's called contango. That's part of the time value of money, and you pay to roll them forward. So they become pretty prohibitively expensive, over the long term. And that's more of a professional trader tool, not one for a retail investor. So the point is, through Kelo Reserve, is that your return is based solely on the change in price of copper, not any of these other external factors. And, there are, a virtually unlimited amount of investors that are looking for that sort of non-correlated return, and, also investment in a physical asset and believe in the supply and demand story.
Right. So I'm trying to understand. So you gave me the price of $5.50 is that the current spot price around there?
More or less, yes.
Okay. So $5.50 for
per ton,
how much?
Or per pound, excuse me.
Per pound. Right. So is that including your spread of how much, say you bought it for $5.30 and then you will list?
So
the
$5.50 is kind of the midpoint where, again, indicatively, we're selling it to customers at $5.70 and buying it back from them at, call it, $5.30.
Oh, I see. So $5.50 is the mid.
Yes.
Okay. So, and that's how you make your money, right? In between the spread.
That's exactly right.
Okay. So the story for the customer, or the your ideal customer, what they're hoping is they're going to buy it for 550 and say hold it for 10 years, and it's going to turn into say $100 or something like that, right? That's the pitch to the ideal customer.
Yes, at the end of the day, the value of copper is going to increase. Certainly in our view, certainly above inflation. And we don't provide investment advice. We provide information, and but so I don't know if that $100 price target.
Right.
I don't think it will increase that much. But the price of copper over time will increase. It's inflation resistant. It's a dollar
Right.
hedge, and
Yeah.
it provides benefit to the investor.
Yeah. Do you possibly foresee any scenario it might go down?
There will be volatility. I can't prognosticate, what's going to happen in the economy overall. The stock market goes up and down. Metals prices will go up and down. We believe in the long-term horizon. We're not saying, hey, if you don't buy it in the next week, month, year, you're going to miss the boat. But we preach long-term. We're not a platform built for, daily traders.
Oh, so you can't, like, for example, I can't buy it today and sell it tomorrow?
You can. But it's really, again, just kind of with our fee structure, as well as, there's just better instruments if you're going to be trading in and day out. But we absolutely allow you to do that, so your investment's liquid from that perspective. But we're just built for longer term investors.
You mentioned fee structure, as in, like, because I'm buying at 570, and if I have to sell tomorrow, I'll likely be selling at 530, so I'm taking a loss, right?
Yeah,
So
that's exactly right.
Right.
But if you were going to be just kind of like, I know you were in the Forex market. It really, if you are a daily trader or a professional trader, futures are probably a better place for you. They're more liquid. They're not dealing with the movement of physical metals. So for a day trader or a super active trader, I wouldn't recommend our platform.
What would be a recommended hold time if someone was asking for advice? What would you tell them?
I would say long term. I would say think about holding this, definitely a year. Things, if there's an amazing price changes, of course, there's optionality at all points in time. But I would say on average, be able to look at call it 3 to 10 years.
How volatile is it? Like, from a day-to-day perspective, how much does it move?
Traditionally, copper is less volatile than the precious metals. So if you think about it, the range within the last kind of 3 months has been kind of between 6 months between $5 and $6. So there's some volatility there. But if you think about silver, it's gone from $30 to $120 and then down to $70. So on a relative basis, copper and the industrial metals, I should say copper and the common industrial metals like, aluminum and steel are generally less volatile than precious metals. And then when you think about some of the metals we'll add in the future, iridium, ruthenium, tungsten, et cetera, if they can be relatively volatile, because if there's a new scientific discovery or a new use, those markets aren't as large, and there can be a dramatic price increase. We've seen it with a number of metals kind of over the last 10 years. But copper is relatively consistent, but still volatile. It can go down.
Yeah. How is so the price change, is that happening? Is that like a algorithm running behind the scenes that doing the math every few seconds, or tell me how it works?
We're actively managing it. So we have a couple of different points of information that we're looking at. Typically, we're adjusting it ourselves, and we'll kind of be building a feed. But it's something that changes multiple times per day.
So when you say you're managing it, is it like a manual process right now?
Today, it's largely manual. Yeah.
Okay. How often does it change in a day?
It depends on the overall market. So we get notifications constantly, and we'll change it based on the movement. So, in theory, if there was a heavily volatile day, we'll change it 20 times.
Does the news ever impact it?
Oh, certainly. It's like, absolutely. So, whether it be, traditionally copper has been referred to as Dr. Copper. And that's because, again, when you think about the need for copper in building an investment, when the economy is doing well, there's a lot more copper demand. So generally, there's been an economic bellwether attached to it. Given the supply and demand story, largely that's been a better store of value, and it's looked like a precious metal. When there's, just like, oil prices are changing dramatically with what's going on, in the Middle East, if there's a supply disruption or tariffs announced, that's when volatility really comes into play.
Do you allow short selling on the platform?
We don't. That's again, when you come into the regulatory perspective, like, we are a simple product. At the end of the day, like, if you want to buy copper, you own that amount of copper, pooled in our warehouses. There's no lending. There's no futures that you're buying. We are dealing strictly with the physical metal.
How does the taxes work at the end of the year? Is it similar? Like, do you still get a similar?
That's right. If you sold, it's the typical kind of capital gains taxes that we report.
Right. So the form will look similar to if you were holding, say, gold, right?
That's correct.
Okay. So
again, there's only a taxable event if you sell. So
right.
So if you own for 10 years, there's taxes at the period of time at which you sell, but until then, it's an asset on your personal balance sheet.
Right. There is no like a passive income play here, right? Like, as in like some kind of a dividend. You would never do that. Never get that.
No, that's not. Again, like, we don't lend out, to industrial users, or we don't have any other financial products sitting on top of the physical metal. We are purely the physical metal, sitting in a secure facility. No other activity is taking place.
Do you think it's something that you might think of in the future?
Not within this specific model. Again, like, we are selling the trust factor of, like, ultimately, if you're doing something else with the metal, yes, you might be able to create a yield, et cetera. But with that yield comes risk. Like this, your risk here and your opportunity is the change in the price of copper, not in, some other, lending opportunity that we're managing. So from a kilo reserve perspective, no, that won't be the business model.
What about like in a catastrophic event, like there's like a tornado or like a fire or something that kind of like damages? That's still a risk, right?
Yeah, from an insurance standpoint, investments are insured. From a tornado perspective, again, it's incredibly heavy. Low to the ground. But we have standard industry insurance on the products. So from a real risk perspective, I'm not sure. I don't want to ever say there's no risk involved. But physical copper, physical metals stored in storage facilities are pretty well insulated from those sort of events. And then insurance takes care of any third-party actions, fraud, et cetera, that take place. I mean, that's why we use third-party facilities. That's why we have it audited, and ultimately, we feel incredibly comfortable with the security of the asset.
Right. What about a fire event? Is that it's not fireproof, obviously, right?
I mean, there would be some damages. I mean, again, the facilities themselves are built to suit for those metals, sprinklers, et cetera. So not highly flammable, not flammable at all. So I'd have to kind of dig into the specifics of different risks, but we've been over it with the security storage providers, with the insurance companies, et cetera. But these are large facilities and, very well preserved, the assets.
Yeah. What are your holding costs? So clearly you are paying these warehouses, right, to store your copper, and you need to have some level of activity or some level of revenue that needs to be coming in to cover those costs, right?
Sure. So from a customer perspective, again, for copper, there's a 1% annual storage fee, that's billed monthly. And that, the high majority of that goes to, pay for the facility cost and ongoing preservation of the asset and management of the asset.
I see. Okay. So say I bought 1,000 pounds. Is that equal to 1 ton?
A metric ton is 2,205 pounds.
Okay. So 1 metric ton, how much will that be, more or less?
Call it $13,000, $12,000 to $13,000.
$13,000. Okay. So say if I invest $13,000, right? I'm just trying to figure out how much my holding costs are. So that would be
$130.
1% of that. So $130 per month. Right?
Per year, billed annually. So call it, $10 a month.
Right. And you're charging it monthly or yearly?
We are. It's a monthly charge.
Okay. So you're charging me $13 per month, and that's it? Is there any other fees?
No.
Okay. So $13 per month is what I'm paying every month. And
call it $10 a month. Divide by 12.
Okay. Yeah, you're right. Divided by 12. So $10 per month. So I'm paying $10 per month. And so I need to have enough cash in the account to make sure that you can charge me, right?
Yeah, and actually that component of it, you can have a credit card on file as a backup. We'll send you a note to give you your balance if you owe it.
Right.
Most people choose to have a small amount of additional cash in the account. Many of our customers are making kind of regular purchases over time. So they believe in the long-term story. It was at $6, 2 months ago. It's down at $5.50 now. They're buying some more copper. It's kind of dollar cost average into a lower price. But there's many customers who have, come on the platform one time, bought copper, either put their credit card information. We can talk about data security separately, because that's another important trust item. But people handle that budgeting for that storage fee in different ways.
Right. How many customers do you have right now on the platform?
There's a couple hundred.
Okay. So like 200 or so.
Call it probably closer to
300. Okay. So 300 customers. And how many of them are actively trading versus passive investors?
No, there's been very few sales. So there's
mostly buying.
Mostly buying. And we look at kind of that really building the volume as kind of the main action that'll take place over the next number of years. And
Right.
typically, I mean, again, in the nearer term, if people do want to sell or when people want to sell, we're really matching them with buyers on the platform, so that we're not actually reducing the amount of copper in our facilities.
You're matching them with buyers on the platform. If they want to sell, so that you
Right.
don't have to.
Right.
Okay.
As an example, if you bought your ton of copper,
Yeah.
6 months ago, and you're selling it now, we have new customers coming on or existing customers that are buying more copper, their activity is going to account for your purchases. If we do have a net, sales in a certain period, and we do need to reduce the amount of copper we have the same ability to sell into our industrial suppliers. So it's a two-way contract where we can sell copper back to them at the prevailing market price.
Right.
So we have offtake.
When you do sell back to them, do you lose money or you still make money on that transaction?
Ultimately, again, each day in the market's a little bit different. But if we're using today's prices, our buy-sell price is, call it, around that $5.50. So it's still a profitable transaction when we sell back into the system.
Right. Unless the prices have gone down.
Well, then our customers would be selling it for, we'd be paying less to buy it back from our customers.
No. What I'm saying is, if you bought, say, you bought a lot of it in 2025, but in 2026, for whatever reason, the price went down to $4, and then you have to sell it. Wouldn't you take a loss?
We wouldn't, because our customers, at that point in time, our customers bought it at, say, again, I don't want to lose track of the numbers, but if they're buying it at $5.50 and the copper price has moved down to $4, then we are buying the copper back from them at, say, $3.80 and selling it for $4. So we're not taking the customer kind of absorbs the change in cost. Just like when the price of copper goes from $5.50 to $10, we're not making that change in price. The customer is.
Right. Okay.
And we're just making a transactional cost when they buy or sell. They get the benefit of the price increase.
Right. So essentially, you're a market maker, right?
Essentially, I mean, we play within the physical market and we provide prices for our customers.
Right.
So, I'm not sure about all the kind of the technical considerations that come with it, but yes, I mean, we post a price to buy and sell, an informed price at any given time.
Yeah. You said you have 300 customers. Out of those 300 customers, what's an average buy price?
Amount.
Yeah.
So
amount. Sorry. Yeah.
So it varies highly. So we have some, 6-figure investors. We have some investors that have come in at, $500 and invest $100 every week. It seems, I think from a round number perspective, it seems a lot of people like to say, hey, I own a ton of copper, and buy exactly a ton. So that's probably like, the kind of the most frequent purchase is a ton of copper, but really, there's no customer that has the exact same, profile and it's a highly varied number.
Right. So tell me a little bit, you mentioned data security and, it's something that you put in a lot of effort in. Tell me about that. So, yeah.
So really starting from the beginning of the process, like in order to register for an account, we use third parties, data managers, well-known companies kind of across the board. So just from an account security perspective, we use a company called Twilio for all their 2-factor authorization. So accounts are secure. And then we use Plaid One, to do KYC, AML background checks. That's know your customer, anti-money laundering. You do have to scan your driver's license or another form of ID like a passport. All of that information, again, it's a taxable account. So you do provide your social security number, but all that data is held by Plaid, not by us. So we're incredibly cognizant of the personal identifiable information and keeping that secure. So that's why we use those firms. And then again, when you transfer money through us, we don't get your bank account, credit card information. We're also using Plaid, their existing apps and inputs in order to get money into the account. I mean, you can also, for larger amounts, you use a wire. But across the board, from personal information, bank information, we don't hold that information ourselves. We use large third-party firms that specialize in those areas.
Yeah. Do you have right now, do you have any like similar platforms who are your competition?
No. I mean, that's part of the beauty of it is, we don't know of people who do exactly what we do. Again, from a comparable perspective, there's a number of different precious metals dealers who do things, exactly. I shouldn't say exactly, but very similar to what we do. So it's not a new unknown business model. It's just, we're the first to really come in and do it from an industrial metals perspective.
Right. Okay. So I think I understand the business model now. So let's talk about a little bit about the constraints. But before we do, can you tell me how? So you have 300 something customers. How did you acquire them?
So a few different general ways. One, so from a company structure perspective, so Kilo Reserve, operates kind of alongside of my business partner's company called Kilo Capital. And they've been in the larger commodities business for a while. And there's a kind of a list of interested individuals and supporters of the company that we've been able to tap into, again, that understand precious metals but haven't had this direct access to copper. So then we've done quite a bit of kind of internal marketing, with existing contact bases that we've worked with in the past. And then we have a number of customers who have, thankfully found us through their own research online. And then just very recently, we've started our kind of paid advertising. We have a kind of a big plan runway there, but we've started within the Reddit space, and have received good feedback and interest through that platform.
Okay. Kilo Capital, what is that? It's a separate company?
It's a separate company. From a management perspective, we leverage their CFO, COO, and their trader. So from an operational standpoint, we pay for an allocation of those folks' time. It gives us a lot of controls from a business perspective. And again, from a sourcing perspective, we're able to leverage the relationships they've built over the last decade. But as a company, we're a separate entity. But we're able to, again, leverage the skills and the strengths of both the individuals there as well as from a networking perspective.
How many people are in your company?
So from a full-time resource perspective, I'm the only full-time employee. Okay. Again, we have people within the Kilo infrastructure that we leverage as a shared resource. And then we have a number of 1099 associates that are really from a marketing, non-customer facing, non-data access perspective that we use for marketing and other activities.
What about the actual platform?
So the trading platform itself. We've leveraged a kind of an out-of-the-box system from a company called Aurasoft that specializes in precious metals trading, and they've customized their kind of trading platform for us to have a more retail-focused front end. We've used kind of a large server provider company that's used across kind of the financial services network. So we have a big, server support and then IT support, through those providers.
Right. So essentially, this is like a cloud-based platform, cloud-based software, or is it like a housed like in a data center?
So there is, I'm not the best technical resource, so I don't want to misquote this, but yeah, we have, we have a kind of everything's backed up on like an Azure cloud system through Microsoft, and redundancies, et cetera, so that there's full technical support, monitoring at all times.
Right. So the technical person, like, is it the software company Aurasoft providing tech support as well, or is that like a 1099 person managing that?
So we have Abacus, who's kind of an international leader from a technical security perspective. We have them engaged monitoring the overall data and like monitoring the activities that are taking place, monitoring uptime, monitoring for any sort of data hack sort of situations. Aurasoft is the software provider for the trading platform.
Okay. So they provide the support as well, right? If there's like a technical feature that needs improvement, they will handle
definitely. That's how I would really differentiate between the two. Aurasoft owns the trading platform, so that's where you go in, you press buy, you press sell, and then the whole technical cloud-based system and physical server room, et cetera, that's all managed by Abacus, which is a separate group.
Right. So when someone logs in to the trading platform, it looks like any other like stock or bond or some kind of a financial instrument trading. You have like buy, sell.
Yeah, I mean, so effectively you come in, you establish your account, as I talked through before, going through, with Plaid-based background check, et cetera, or, identity verification, I should say. You fund your account through Plaid. When you click into the trading platform, it's kind of a very simple view. Select the product. Today that's copper cathode. Sell price, buy price. How much do you want to buy or sell? Press confirm. And then the reporting that shows all the trades that you've made historically, shows your cash balance, shows your metal balance. So yeah, similar to another brokerage account.
Yeah. And you can trade 24/7 or there are hours?
So we post a price 24/7. If you're making a very large trade or under certain conditions of volatility, you may have to call into the trade desk, but we post a price 24/7.
Okay. So going back to how you acquire customers. So you had the initial few hundred who came from the Kilo Capital referral network, right? Is that like an ongoing thing? You're expecting more to come through them, or was like a one-time push?
So we have what I would call a regular drip campaign, newsletter, post blogs, et cetera. So that, anyone that's kind of subscribed previously or expressed interest or kind of joined on LinkedIn, they'll receive regular communications. And over time, as people get more familiarity with us, we do expect, additional investors, or as we add additional metals that interest them, we expect additional uptick. from that set. And but obviously the big goal and the constraint is, how do we get out to people that have never heard of us before?
Right. Yeah. So that's where we're getting to. Okay. So yeah. So that's like a warm traffic that people already investing
Yeah.
in precious metals, and now we're like telling them, well, these are industrial metals that you should also have exposure to. So that makes sense. And then you said you're doing paid ads, Reddit ads. Is that has that campaign been successful and profitable?
It has been. We're kind of in the relative new period of it, but we have pretty good metrics of call it around $3 a click. We've got a number of people that have subscribed to our white paper and newsletters. And then we have kind of a retargeting campaign. But we don't expect people to come in the second they see our website and say, "Hey, I want to, invest $15,000." So there's hey, we need to meet you. We need to show you, that we have good insights. You need to think about it. You need to learn a little bit more about our company, why you can trust us. So it's not I want to buy, I'm hungry, I want to buy a sandwich type of transaction. There's a bit of a courtship between, the potential customer and us over time.
Lead nurture. Yeah.
Yeah, exactly. Standard kind of nurturing activities. And then, when the time is right, they know about us. That nurturing's taken place and they're comfortable to transact with us.
Yeah. Any other marketing pushes, like Reddit ads, referrals, anything else?
We're about to launch more broadly with kind of what I would call the more standard set of, Google search words, some stuff with Meta, Facebook, and general retargeting through those programs. But we're kind of in Reddit's just a wonderful learning ground. There's people that are very active within the metal space that we can immediately target into. So we're kind of learning what works from a nurturing perspective with that population before we go more broadly. But within the month or so, we'll be flipping that switch.
Okay, so PPC, pay-per-click, and Meta ads would be your next thing that you try, right?
That's right.
What about organic? Just having like a YouTube channel and educational videos.
Yeah, so we have a small YouTube channel. We're kind of adding to that content. We're talking it, with great people like you to try to help get the word out as well. But that's a long-term play. And we also look at organic as being incredibly important for building trust so that, once they find us somewhere else, they can go and look at our YouTubes and, see that we're credible and that we operate the right way. But sure, over time, the more you can do organically, the best, the better you are. That's just an amazing, from a kind of one from a cost perspective, but that's hard to do. So we're very aware, eyes wide open, that in order to hit our goals, we need to pay for some of these leads.
Yeah. Have you looked into working with influencers, and kind of like tapping their market or audience?
We've talked about it quite a bit, internally. I think we kind of need to find the right ones. We need to kind of establish ourselves a little more, because, the credible influencers, I think, want to attach themselves to, a brand that's achieved a certain amount. So, we'll see. It's certainly we'd love endorsement from, anyone that, we really look up to as kind of brand stewards. But we'll have to see how that plays out.
Do you have any already have any affiliate programs or thinking about it where someone say, for example, we buy and sell vacant land, and I'm guessing there probably a demand for industrial metals in my target audience or not audience, but target buyers. Do you have like some kind of an affiliate program that, if we send you someone, we get a kickback kind of thing?
We're very open to looking at that, but no, we don't. I mean, I think that actually, we haven't talked about that with any sort of deep dive in a while, and that's probably pretty important if we can align with the right people that are supporting our brand.
Yeah, because then pretty much everyone wins, right? You get a new customer, you don't have to spend money on marketing. You just give
Yeah,
the
I
person a
mean,
kickback.
yeah, exactly. It's a substitution of the marketing cost. Instead of
Right.
you're paying an individual on success. They're motivated. We'd be very open to it.
Yeah. Yeah. I think, yeah, especially with adjacent owners, like adjacent businesses, like land, a lot of land buyers, I'm guessing would be interested in this, like gold buyers, or like coin collectors.
Yeah, no, you've hit the nail on the head there. I mean, again, we love, or we feel like we really appeal to real asset lovers.
Hmm.
So land, gold, um,
Yeah.
anything tangible. I mean, that's what we're selling, is a tangible product.
Right.
That can't be, it's not a paper stock, et cetera. It's a real asset. But we love
Yeah.
it. I mean, you know, there's probably a good number of personalities out there that could really roll with it.
Yeah.
Um, so yeah.
Um, Tell me about you mentioned lead nurture is something that you're looking into and you're actively trying to tweak. So what is the current lead nurture look like? Is it more like an email drip to keep on getting emails? Or is it more like, oh, let's get them on a call or a Zoom call and get some feedback?
Great question. So, if you kind of use, what I call traditional market speak, we have a couple of different offers. Our real top of the funnel offer is having people download a white paper. After we have a white paper that's been out there for a little bit, we take off the need to enter your name and email address. I mean, we have active blogs that share a lot of useful information about the overall market space and the opportunity. But once we have your information there, there's a regular cadence of kind of newsletters, sharing new blogs, and then if you've gone through and registered but haven't purchased copper, you kind of get a reminder of what's left in the process in order for you to go through. And then the two other campaigns that we're really working on are one, a live demo. We call that our bottom of the funnel
Hmm.
offer. So, hey, you've expressed some interest. There's some reason you're not going through. Let's show you really kind of what that is, or what that looks like from a process. What does the plaid look like, et cetera. And then just additional information and education from a middle of the funnel perspective, whether that be comparisons to other investment types, et cetera. But once people know about us, again, we feel like we have the right educational tools, to take them from what is Kilo Reserve, what is copper investment, to how does Kilo Reserve operate?
Hmm.
Why should I trust Kilo Reserve? And then ultimately, what does the onboarding and kind of long-term process look like? That if that
Hmm.
appeals to you, you'll then become an account holder.
I see. So have you gotten any feedback like from people like on how to improve further, like, or maybe feedback on the platform or feedback on the structure of how much you charge and that monthly fee?
I think from a pricing feedback perspective, I mean, we've gotten a lot of feedback. And I should mention one other thing there before I kind of talk about the process and the platform. But the other opportunity to invest in physical copper is through, just like they have gold and silver coins, there are copper coins, often referred to as rounds, And then there's bars as well, copper bullion. So the thing with those is they cost a large amount of money to fabricate. So if the cost of a pound of copper is $5.50, if you want to buy a copper bar that's been melted down into a standard bullion shape, I mean, you might be paying $60 to $100 for that. So copper would have to go up 12 to 20 times in order for you to make money on that investment. So, when you have the opportunity to buy copper for 4% more, so for 20 cents more at a $5 price, like that's not an opportunity that, the retail customer has today.
Right.
So, we've got a lot of, we've got a lot of people that understand kind of where we are from a pricing perspective. They understand the volatility, they understand the service that we offer, and, haven't received have received very fair comments there, and actually a lot of people that expected us to charge quite a bit more. So we feel that's a very fair offering, and that the market has confirmed that. From a general process standpoint, I mean, again, we use, I mentioned a few agencies that we've used a few agencies, both in terms of, building the website, building out the blogs and the information available. So probably haven't gotten a lot of non-biased information. But, the information that we have gotten has been positive, but, would love to take some reps with some people out of network and get additional feedback.
All right. Okay. Let me give you some honest feedback from my perspective.
Please.
So the monthly fee is a turnoff, to be 100% honest. When I like to think about investing something, something like this, like a physical asset, like, and I'm telling you this because like we sell land and people hate
Sure.
paying property taxes, and if there's an HOA, they just lose their top, right? Like they're like, oh, I'm not gonna pay. So I think that might be a potential hiccup that you'll have to either do a really good job in the education process of
Sure.
why that's necessary, or a better option would be maybe to increase your spread even more so you can absorb that monthly fee so you don't have to charge them. Because because right now I feel like your offer is weak. Top of the funnel, you're saying, oh yeah, I'm going to give you free white paper, which is not exciting. I'm trying to get, my understanding is you're trying to get to like whatever, like 100 million and in gross revenue, which means you're trying to get to like average investors, right? Like mom and pop, or like individual investors, retail investors. So that means you have to please pretty much the majority of people who are into investing, right? So I think that would be the biggest thing. So do you think it's possible to waive the storage fee in exchange for just charging more on the spread?
It's a good question. My initial blush is, I mean, again, that's a real cost. So we pay that cost.
Right.
And, it's passed on. So, kind of like if you want to use property taxes, like that's a real cost that has to be paid. I mean, so from a business standpoint, risk management standpoint, I think it's always best to kind of match your incoming and your outcoming. And that's what we're doing there. I mean, effectively, if someone held the copper for 10 years and we're paying that cost for 10 years, they become, negative revenue customers. Even if you haven't increased the margin, fairly significantly up front. But I do think, again, to your point, in the trust standpoint, is understanding what people are getting with that service. I mean, think of it as a storage facility. I mean, if you have, 4 tons, even 1 ton of copper, right? I mean, that is, 3.5 by 3.5 sheets. I mean, you can't lift that amount. You can't have it in your garage. You can't have it in your dining room. You can't have it underneath your bed. So it's a real cost.
Yeah.
And it's equivalent or less than, what you pay for an ETF management fee, or a broker fee for kind of managing your portfolio.
Yeah.
But again, I agree with you that, people don't like fees. And if you
Yeah.
didn't have that fee, it would be, customers would like to have that service for free. But it's really a real cost for us. So that's where I would, it's not a made up transactional
No, I
amount.
know. No, yeah. No, I never said that.
No, I didn't. I'm just, I'm just saying, I didn't say,
Yeah.
No, but from my standpoint, like, again, if because customers choose how long they hold the copper, right? And like, if you were, I'm trying to think of a comparable real estate example, but at the end of the day, like, we want to be fair with our customers about, hey, this is where this is where work is taking place. We're charging for the work that we're doing. This is where there's ongoing maintenance, and we want to make sure that, that's passed fairly on to the customer.
Right.
So hopefully they can understand that. But, it's a good question. I'm just not sure if it's feasible.
Right. Okay. So yeah, I'm acting as like we're on the same side, right? I'm just trying to think of ideas of how either can we waive the fee, or if we're charging a fee, we provide so much value in return that they're like, oh yeah, that's nothing. So for example, I'm thinking if I'm Alan and it's my company, I'm thinking, can we give them, like, make it a storage fee, or just say like monthly maintenance fee, which includes storage costs, and it also includes a monthly report, like a copper report, like state of the market. It also includes a custom report to how their portfolio is doing, so it pushed to their emails as opposed to them logging in, so they don't even have to log in. A free text alert system where if the price moves by, say, 20% or something, then they get an alert, right? I'm just thinking of an offer, like stacking the offer.
Yeah. I like the way you're positioning this.
Right. So yeah, because that's what I do, right? So I'm just because in my head I'm thinking, what is a negative thing in the offer, and how can we position it into a positive thing?
Yes.
Right? Because the first time I heard it, it was like, oh, $10. Oh, come on. I need to pay $10 a month for storage. Why do I have to pay? Right? That was my reaction in my head. So, and now I'm thinking it from your perspective, right? Because I know the customer is thinking that, and how do we flip it?
Yeah, I like it.
Right?
Yeah. So no, I think what you're saying there, makes sense.
Yeah.
And that ongoing education is also already something that's so important to us. We want people to understand, the overall market.
Right. Because the more you educate them, the more you have the opportunity to send these reports, the more they get excited about copper. So you have like a positive news. Oh, Microsoft is buying another 400 acres in Virginia, and they're going to build like this massive data center, which is going to require this amount of copper, which means the prices potentially will go up, right? And then you send that report out, right? And that's like, you're like, oh, well, I'm paying $10 per month, so I'm getting this report. So that makes sense. So it makes me feel good about my $10 per month, right? So that's how I would structure it, as a maintenance fee, which storage is like just one component. So essentially, what we want to do with any offer is make sure the discrepancy between price and value is like absolutely ridiculous. Because the way you were explaining it to me was like the value of price, the ratio of price and value was like at par, oh, I'm getting paid, I have to pay $10, so I'm just pushing it to the customer, right? That's like at par offer. But when we make irresistible offers, they're not supposed to be at par. They're supposed to be like this. The value is so far high up that people feel stupid saying no to that fee.
Yeah, no, you're right. And I think, and the honest truth here is, I mean, I think we provide a lot of that value, but don't sell it at all today. I mean,
Exactly. Yeah, you got a position. Yeah.
yeah,
So
it's poor positioning at the moment.
yeah. So if you structure, yeah, just change it to a maintenance fee and then say, well, because it's the storage, it's this and this and this. So I'll give you an example from my company, right? So we charge a dock fee, which people hate, right?
Sure.
Like if they close in house with us, right? Because we have to prepare the paperwork, deed, and all that contracts. So we started charging dock fee because we're having this all staff cost that to prepare like 7 documents and then record with the county and all that, right? Because we borrowed it from the car industry, right? When you lease a
Okay.
car or you buy a
Sure.
car, they always charge a dock fee. So we started charging a dock fee, and then people hated it, right? And then we're like, well, but with that you also get a custom trophy when you buy the land. You also get this, you get concierge support, you get this, you get that, you get 9 bonuses, right? We loaded up so much value that people are like, oh, I see. Okay, yeah, then it makes sense. Yeah. So I'll pay the 595 doc fee, right?
Love it.
So
Love it.
yeah,
Just
so
great
that's
advice.
yeah, so that's how you want to think of the offer. So now let's go back to your. So that's on the fee side because that was my first gut reaction,
Yep.
right? Now let's talk about your top of the funnel offer, which I feel like is very weak right now because you said free white paper. That's not exciting at all to me. So how do we make that exciting, right? Can we give them um free 7-day access to the trading platform, and will, like, you know how Forex is doing this, like how Forex got me, how they hooked me. They had something like free $20 worth of trading or something, $20 credit as long as you deposit $500 into the account or something. Why don't we make the same offer?
Yeah, I'm not against, initial deposit match or discount or pricing benefit. I mean,
Yeah.
the question to me, and not to get into semantics is, I mean, is from your perspective, does that the first, like, invest in copper and get a price deal? Like, or do you need to learn about copper and understand it first?
Not necessarily. Not necessarily. You think people understand Bitcoin? They don't understand the technology behind how, they just want to make money. I think you might be overthinking the because you're assuming, oh, your customer is like a PhD and they need to do like logical decision making based on, oh, copper might go up. They don't care. They're like,
Yeah.
oh yeah, it's a new thing, right? Diversifying, and I'm going to buy copper for 5, I'm going to sell it for 50. That's what they're thinking. Now,
Yeah.
of course, there's this subset of people who are like, oh, I want to do all the due diligence and all that, right? But the juicier the offer, the bigger net you're throwing out in the waters, right? Because you don't want to, just because white paper, you're essentially targeting PhDs.
Yeah, white paper, we might be oversell, and I mean maybe that is what people think of white papers, because really our white paper is not, a mathematically complex um, dissertation. It's it's a general kind of the same story about copper that kind of I ran over with you, that I mean is very relatable. But we might be
It's a PDF.
packaging. Yeah, we might be packaging it all wrong.
Yeah,
Um,
I think so, because that's what it sounds like. It was like, who's gonna read a white paper? People don't have time. Like, why don't we make it a video, like a more like a video ad? And even then, even the problem with the video ad is it's better than a white paper, but you still have to. It needs to have high retention and all that. So why even bother with that? I would just start with a very hooky, like literally stop people in their tracks offer, which is like, oh, deposit, or like something like free $100 worth of copper trading, limited time only, offer expires next Friday, and then put an asterisk on there, and then you click on the ad and it says, well, you must deposit $1,000 to be eligible for this
Right.
offer. It has to be, the deposit needs to come through or clear before next Friday. You must trade within the next 30 days. So you have, like, it's not like a free for all. It's a conditional offer, but it gives you the ability to use the most powerful word in marketing,
Free.
which is free. Yes.
Yeah.
Because people
Yeah.
literally stop scrolling when they see the word free.
Yeah.
Right? So that's how I would position it. Free white paper is like, yeah, whatever. Right? But free $100 worth of trading, you buy copper and you just say copper keeps on going up, and you throw in a nice graph, just like this, keeps on going up, like a last 30-year graph, and say this is your chance to it might be the
Yeah,
new
no,
Bitcoin.
I think you're right. I think we're biased, or I think we're biased overall to wanting to educate,
Yeah.
and wanting people to understand. I think transparency is incredibly important to us, but that doesn't mean it's the best thing from a marketing standpoint to hit our goals.
Right.
So I
Yeah.
think, I like both of these suggestions on the maintenance fee and kind of building all the value, as well as strengthening the offer and trying, showing people immediate savings in their pocket.
Yeah. And here's another thing, right? So if you do feel strongly that you want people to be educated, make that a condition. So say, for you to be eligible for this offer, you must first sign on the platform. You must deposit $1,000. You must watch this 20-minute video so you understand the history of copper and how it's
Sure.
positioned to grow, right? So it becomes part of your funnel. So it's not like, it's not either or. It's like, how do we put everything
How do we get it all out there?
Exactly. In like a workflow setting where they must do step 1, step 2, step 3, and then they get their carrot. We're not just gonna give away money for free. We're qualifying and converting a lead into a customer by educating them in the process. But the initial top of the funnel offer needs to be irresistibly attractive. Because otherwise, you're just going to burn so much money on ads, and it's not going to convert enough. Costs just keep on going up, right? CAC, cost to acquire a customer, the
Sure.
ad cost keeps on going up. So you need like a banger-free offer that pretty much everyone who has ever traded in gold or stocks or Bitcoin looks at offer, stops in their tracks, signs up, watches the video, deposits $1,000, and then trades,
What if we combine those two problems and say, hey, subscribe now for I'm making up the offer, do your $1,000, and if you act within these time periods, your maintenance, there's no maintenance fee for the first period of time, whatever, 6 months, a year.
Yeah.
So then you've done both of you've kind of addressed both of your issues.
Yes. Yeah.
Within at once.
Yeah. No, I like it. We can do that. And then when you do start charging the maintenance, or when you do that educational video, you also explain the maintenance
Of course.
fee. Yeah.
And they see all the other value that they're getting every month already.
Right. Yeah.
So it's not like, you're doing, nothing, and then all of a sudden there's a charge there that they weren't expecting. You're educating and providing value that is free. I don't even know why, those air quotes are necessary, but you're providing that value for the first period of time. And then, you are charging, the requisite fair amount, on an ongoing basis.
Right. Okay.
I kind of like putting both those together.
Yes. Yeah. No, I love it. So when you're designing an irresistible offer, here are the 3 components, right? Number 1, it needs to be easy and low sacrifice. as in like, oh yeah, so it's just a matter, you said you're already using Plaid, so you just put in your credential, you're going to transfer over. So it's pretty much make it super easy. Oh yeah, it takes like literally 5 minutes to get started. So
And
make sure that's in the, yeah.
Yeah, that is right. I mean, I say this to
Right.
myself, $10,000 is the kind of the ACH limit. Above that, you have to put the wire in. I mean, so
Yeah.
like I say to myself, like, invest $10,000 or less in under 10 minutes because the process
Yeah.
is incredibly
Perfect.
smooth.
Yeah. So make sure whenever you have any kind of offer, so easy and fast. So that's the first component. Second component is it needs to be risk free, right? Some kind of a guarantee, like, because people will be thinking, what's the catch? That's what, then when you use the free word, right? And you say, oh, you're going to get $200 and you get all these things. Now the problem has shifted. Now they're not thinking, oh, I don't want to invest. Now they're thinking, what's the catch? So you need to make it risk free. So how do we make it risk free? So we can say, if you're not satisfied with the platform, you can close it out, no charge, no questions asked. Just click on this cancel button, and you will get your money back. So we have to make sure that risk free is part of that offer as well, right? Because that's like the first thing people will think when you make the offer too juicy, right? So risk free we handled, easy and fast we handle, and the final component is urgency. We
Yeah.
talked about this. So
Yeah.
if you say, oh yeah, it's a free offer with no deadline, people will be like, oh yeah, I'll come back to it later in the week, and then they forget about it, right?
Yeah.
So we need some kind of urgency. We'll be like, expires next Friday, never to be seen again. But if you use that phrasing, never to be seen again, make sure when you come up with a brand new offer, it's not exactly the same, because you want to be ethical in your
Of
marketing.
course. I mean, we put
Yeah.
ethics first. I do
Yeah.
want to push back on the risk-free component. I mean,
Okay.
because, again, it's a volatile item. So like, again, if you buy copper today and you're totally satisfied, copper goes down in price tomorrow, that's not something that we can absorb.
Risk-free, as in risk-free on their, as in they put in their deposit, they're in like the platform. They get their money back.
Of course. I mean, that
Yeah.
already exists. I mean,
No, but it needs to be part of the offer.
Got it. I hear you there. I mean,
Yeah.
but certainly if you haven't purchased copper, you can close your account at any time. That's not a problem. That's excellent point. We don't advertise that or promote that in any way. So
exactly. That needs to be part of the offer.
Copper comes with risk.
Oh,
Opening an account comes with no risk.
Exactly. So because that's what people are thinking, because this is a brand new company. I lost money with Sam Bankman-Fried, whatever his name is, right? With his company. I don't want to lose money with copper. So you have to make like overcompensate for that.
And I know you know this, but just again, kind of for the sake of the folks that are listening, again, the difference, like Bitcoin is on the opposite end of the spectrum here. I mean, you can see and touch and feel copper. Nothing against Bitcoin, but that's, a different value prop than copper is altogether.
Yeah, exactly. No, but same people who invested in Bitcoin will be investing in copper.
That is true.
There's the same people who like to buy stuff, right? And buy and hold people, right? So so those are the things that came to my mind, that the offer felt weak on the front end. Okay, so another idea I had was when you said you do a live demo. Who's doing that live demo?
So actually, in full disclosure, it's a recorded demo that you can do live on demand.
Okay, so it's a recorded demo. Because that's how I was wondering, why are you doing live demos? That doesn't.
No, I mean that's just too, I mean, we may do webinars and other things at periods of time that you subscribe to take at a certain point in time. But by and large, we want things to be on demand because different customers have different schedules.
Yeah.
And when they're ready, we want to meet them where they are.
Right. So that should be part of the education process, right? Like educational video that they must watch before they sign up. Like they shouldn't even have access to the platform. Like the platform, how the video comes up,
Sure.
And then if you don't watch the whole thing, you can't even like get out of it, that kind of thing. You literally block them from going to the platform when they first sign up. You can't even start trading until you finish watching this video, and the video should have like nice graphics and everything,
Of course.
explaining, right? So yeah, and that's where you do the demo. That's where, I'm guessing, and the demo itself shouldn't be that time consuming, right?
No, not at all. I mean, it's a simple process. So demoing a
Yeah.
simple process is, by definition, relatively simple.
Yeah.
Like it should
So that's
be
what I'm
very
thinking.
straight. I mean, nothing about the process is complex or hard to understand. And, the objective of the demo is to show people that.
Yeah. Yeah. I think if you make those changes, your CAC will go down, cost to acquire a customer, and your conversion rate should improve. And then once you implement this and you're spending marketing dollars, you spend $1, you get $2 out of it, or $1.50 out of it. And then it's just a matter of putting in more and more dollars, right? And then it becomes mostly an awareness problem. Like, how do we reach more people? And then, you do more podcasting, spend more money on ads, do more affiliate marketing or adjacent services, or people trading gold, and you kind of like have an affiliate relationship. You send us
Yeah.
your customers, will give you a kickback, or you will send you our customers, and we'll have like a symbiotic relationship kind of thing. So those are the things you would want to look at. And then once you have enough revenue coming in, then you're like, all right, let's throw some money on influencer marketing, hire someone to do organic content and Instagram and YouTube, do lives and all that stuff, right? So that comes later. But first, I would perfect the offer and make sure our
I think that's
marketing
very
dollars-
sound advice. I
Yeah.
mean, and makes a lot of sense to me. So I appreciate that.
Yeah. Alan, this has been great. I appreciate the time you spent with us. If anyone is watching this, and I'm guessing some of those folks would be excited about copper at this point, 1 hour 40 minutes in, I'm sure some people are like, all right, how do I buy copper? So for those people, and they want to reach out, use your platform, what's the best way?
Through our website, www.keelerreserve.com. All our contact details are there. We take incoming calls. Would be happy to educate and get involved with anyone interested in wants to learn more about the market space, and certainly that wants to invest.
Yeah, Alan, it has been a pleasure. Thank you so much.
I appreciate it. This has been a great use of time, educational, and I appreciate your platform.